Well, howdy guys, we have done really well on Palantir. So in this video, I want to talk about my play on Palantir, how much I put in it. So I put in a little bit over $9,000, so not that big of a play. However, this play has really netted me a lot of money in the short term, and I have been running a couple of interesting strategies which we have to talk about. Now, first of all, just some news on Palantir. Palantir went up 8%, so they have obviously had a really good earnings, and so many people are understanding that AI is really here and it is a trend that we want to ride. So riding the AI trend is literally one of the smartest things that you can do right now. I've been wrong about Nvidia, but that's also an AI trend. For me, Palantir has been a very, very easy play though, and I've been talking about Palantir for a very long time on this channel. Palantir is one of my top plays right now. If I go into the chart, I want to show you what Palantir's technical analysis looks like, and specifically what I think is going to happen to Palantir next, because this is a very profitable stock to trade. So in the past 6 months, Palantir has been going pretty much sideways, and I think that this was a $20 stock, no problem, and that's exactly why I ended up purchasing Palantir for $20 per share. Now, I've actually timed this stock really well. I don't really believe in timing the market, but I have timed this stock really well. If we look at my history here with my option trading, I have sold 17 calls, and I decided not to sell some more calls because I wanted to see what would happen with earnings. I thought the stock would go to $20, maybe $21, and this stock went all the way to the moon to $23.57. Now look, today I did sell some covered calls. I am trying to generate some income on my position. I'm pretty much always trying to do that for my students. That's because I'm after consistent income using covered calls. That's the most basic strategy that I'm always trying to implement to generate cash flow in my portfolio. That's the most important thing. If you want to retire, you need cash flow, and you can make over $10,000 a month without even having that much money if you are catching plays like this. I mean, on Palantir, look, I sold Palantir $24 calls. Today, I only had 4 contracts. I sold 4 contracts to make $224. Now, this is going out into February 16, but here's what I would basically do right now. I would do a number of things. I would either sell covered calls if you have shares. If you don't have shares, let's take a look at the technical chart. What I would probably do is I would sell $21 puts. So if you sell $21 puts, that means you can buy the stock for $21, or you can buy shares right now and sell $24 covered calls. So if you end up selling $24 covered calls, then you will generate income right now, as well as if you are selling puts, you will also generate income at this moment. Which strategy is better? Well, actually, I would use both. You can do a combination of selling puts and covered calls. This is called the covered strangle strategy. So, it sounds really complicated, but it's really not. Here's what you would do. I'm gonna go into trade Palantir options. So you can sell some put options, let's say for February 16, which is 9 days out. You can sell the $21 strike, which, granted, it's not going for that much, but if you sell this and you do covered calls, then you are dollar cost averaging, because what happens is you buy stock at 23.61 or whatever the price is when you watch this video, but you also sell put options saying, I'm gonna buy the stock at 21, I have shares right now for 23.62. This is how you dollar cost average into a stock that has gone up, because the last thing that you want to do is fully commit yourself to a stock that has just gone up so much. Now, it's really easy to just say, hey, the stock's going to keep going up to the moon. I am not sure, because I think this stock is worth between $21 to maybe even $29 per share in the next 6 months. So just looking at the news, there's quite a lot that's going to be coming out, and the most important thing to look for with Palantir is their earnings, and it's also what their management is doing. So we also know Palantir stock surge. It does show that investors haven't had enough of AI. I think being in this trend, again, just makes so much sense. If I look at any of the articles, we can see that, well, actually, if I look at the volume, we can see that people are buying this stock hand over fist, and they're really interested in the stock overall. I mean, if you look at, just some comments here at the same time, here's what an analyst said. This analyst was extremely bullish on Palantir, and for good reason. I think that, obviously there's a lot of smart analysts out there. On Palantir, the smartest ones, they understand how AI works. So we cannot rationalize Palantir's current valuation in the base case. However, all of them are still bullish. And that's because Well, let's take a look at Palantir's financial statements. It really doesn't make sense, but it's not supposed to. The best companies don't make sense today. They make sense in the future. So price to sales wise, it's 22, which is again not super cheap. Price to earnings group is actually pretty good. 1.2 is not high at all. Price to earnings doesn't matter at all because we've seen Amazon, we've seen Tesla have really high price to earnings. I think they were in the thousands. Doesn't really matter. This is going to come down quite a lot as Palantir has more earnings. And if we look at the financial statement, you will see that their financials are growing. I mean, they just doubled from 2020 to basically the last 12 months. That's what TTM stands for. So if they double again and again, which that is not an unreasonable trajectory given what Palantir does. I mean, they are in the government's pockets. They're making that government money. There's nothing better than government money. Big stable contracts that just keep flowing in. Those dollars from the government that paying all these taxes for, it's going somewhere. It's going somewhere, and Palantir is capitalizing on that. They have really good relationships in the space, which is pretty much the most important thing. You want to look at a company's brand, which is why I'm so heavy on Apple, by the way. And Palantir, they have a really good brand. And once they come into a company and they download, install their software, it is hard to leave. That's the thing. It is hard to implement new software. That's how they get you. They get you because once you've already started, there's so much cost to leaving them. And that's, another big benefit to their contracts. Not only do they have a good relationship, they also have a really sticky software. So sticky software is really important in Silicon Valley. If you look at the best tech companies, there's Uber, there's Airbnb, there's all these platform software technology companies, right, where they just take a commission for creating a market of buyers and sellers. That's a really powerful business model, but also implementing software where the customer is hooked, like a CRM, right? If we look at CRM, this is really important to pay attention to. So if you're getting bored, make sure to really pay attention right now, because this is really important. If you understand how software works, and I used to work in Wall Street as a software analyst, so I looked at comparables. Looking at comparables means that I'm looking at the entire software sector and seeing which companies have a competitive advantage, as well as which companies are fairly valued, right? So looking at their valuation fundamentally is what I used to do, and that would take a lot of time. I did not really like working on Wall Street. It was really long hours, but looking at a company like Salesforce, same story here. They have, let's look at their statistics. They also don't have the best valuation, but they have a really sticky software. Price to sales wise, they are only at 8, which is less than half of Palantir. It's less than half, but then again, this company has been around for a lot longer, and still their price to earnings is very, very high. Okay, price to earnings group ratio is actually higher than Palantir, so this is a signal that Palantir is actually more fairly valued than Salesforce on this one metric right here. Okay, so a lot of people say that Palantir is overpriced. I don't think so. I think this stock still has a lot more room to run. If we look at the 5-year chart right here, you will see that it is coming back to basically 2021 levels of $28 per share, maybe even $30 per share. A lot of analysts think that this is a $100 stock. Now, I don't know if I would go that far. I don't know if I would say it's a $100 stock, but if it does double from here, we'd be sitting at basically $46 to $50 per share. I don't know what's going to happen in the short term, but I know in the medium term, what I'm planning to do is continue to sell covered calls. I would specifically go for roughly 30 delta. That is my sweet spot. That's my sweet spot for many different companies. Whether it's Apple or Google, going for a 30 delta is pretty proven in my experience. So if I go to, let's say, March 15, say I want to do it the lazy way, go 30 days out, and I go for a $25 covered call, that's going to be a little bit too high of a delta, 43. So if I go to 26, 35 delta, this is going to be perfectly fine. You would collect $90, which is basically around 4%. You can make 4% per month just off of premium on Palantir, and that's because the implied volatility is very good at 55. The volume is also very high, so good volume signifies that it's easy to get in and out of Palantir. You are not going to get screwed on the price. The bid-ask spread is really good at 90, 92. A tight bid-ask spread is very important because, not only do you guys pay fees, even Robinhood has a 3-cent fee right now, but whenever you have a wide bid-ask spread, it's harder to execute trades, it's harder to get filled, it's harder to open, it's harder to close. It's also more costly because then, if you're buying, you have to buy closer to the ask. If you're selling, you have to sell closer to the bid, and I guess you're kind of losing $1 every time you do that, which is why I don't like spreads on Palantir. Guys, I would keep it simple, straightforward. You know, the strategy is covered calls, and you know, the big portfolios out there, you're gonna have a lot of fun. You know, portfolios 50K, 100K, you guys can generate some really consistent income on Palantir stock by just keeping it simple and steady, creating that safe passive income so you know you can retire and have more freedom in life. And I think this is one of the best stocks that you can have in your portfolio. Definitely one of the 10 stocks that I recommend. If you want to see all my trades and get trades just like this, I was in this stock before earnings, then go ahead, click that first link in the description. You can schedule a free call and you can be part of my Discord community where you get to work with me personally and see all of my trades. So I'll catch you guys in the next video.